That's a cool ass effect. This is not sponsored, by the way. All right, guys, welcome to the Traveling Crypto. What I wanted to do today was go over 5 of the top crypto projects that are launching mainnets later this year and do some analysis on them. So here's a list of the top crypto projects that are releasing mainnets and testnets later this year, really within the next couple of months. We have some pretty big names on here. I can't remember where I got this exact list from. I apologize. I usually like to credit where I got it from, but I can't remember at this point. I just saved the image on my desktop. So the ones that we'll be going over are the ones that have the largest market caps, and these are very well known to you guys. We'll be going over Tron, EOS, VeChain, Ontology, and Aeternity, and we'll be running some technical analysis on these and let you know whether I see possible entry points if you don't have these already. Of course, if you follow the trade alerts, link in the description, you should have most of these already, but that is neither here nor there. Let's get right into it. All right, starting off with Ontology. This is Ontology's 6-hour chart. There really hasn't been much data since it launched on Binance in March. So I like to look at the 6 hours sometimes when a coin has a very short lifespan. Not necessarily 6 hours, but a shorter increment. And in this case, 6 hours, because I can glean the most information from 6 hours. So Ontology is basically a series of bull flags. If you see here, let me just hide this real quick. This is the beginning of a possible 5-3 Elliott wave pattern. So I'll just remove that. So if you look at Ontology, it's really just a series of bull flags. You have the same repeating pattern over and over again. These are really sloppy drawings, but you have the same repeating pattern over and over again up until what we have today. And each time, this channel right here that precedes the rally, right? So you have the rally and then the flag itself, or the flag, you have the pole and then the flag itself. So each time it looks like the flag portion, right? This is the third time that we see this now based on this chart increment. So each time this flag itself gets longer and longer, right? So remember the saying that trend is your friend until it isn't. So in this case, we have to move along with what the current trend is. And being that from the fundamental side, they are releasing their mainnet later on this year, we expect the price to keep rallying. There isn't really a precedence for this. So if you are making a play on Ontology and you don't have it currently, again, this is not financial advice, but what I would do is, make sure that I have a set stop limit in place just to protect myself against a trend that is finally broken. But in this case, at least from my perspective, I have no reason to believe that this trend won't continue. You have bull flag, bull flag, bull flag, and then this looks like the start of possibly another bull flag. Again, we're in unprecedented territory. If you look at the fib levels, this right here is... let me move this up real quick. But this right here on the 6-hour chart is the all-time high, and we're not very far off that. You look at the MACD, the stochastic, and the RSI, all three of them are trending bullish at the moment. The volume, at least from this point of view, is a little sluggish. If we zoom in a bit, we might be able to get a better perspective. This right here is the 20-period moving average for volume. So we do want to see traders put enough capital into Ontology in order to push this past that 20-day moving average. And right now we're just touching it, but we aren't convincingly getting above it the same way that we have with this rally and the same way that we have with this rally. And that is why I would say make sure you put an aggressive stop limit. Here it looks like, this, if you use this as the basis of your stop limit, this is minus 21%. That might be a little too liberal based on the fact that we actually don't have enough volume. So in order to protect yourself against something catastrophic, because the lack of volume is something that wasn't present in these, the last 3 rallies that we see here, of these last 3 bull flags, I would say that this one might be a bit different, or this might be a bit premature, and this isn't where the next bullish rally occurs. It might occur later down the road, but being that we are launching the testnet, being that we're launching the testnet in June. Yeah, I remember Ontology saying this. They were saying that based on the roadmap, that it would be out by Q2 of this year. June would be the last month that would happen. If they are not on track, then that could spell catastrophe in the short term for Ontology's price. So I would protect against, again, this is if you don't have a position in Ontology. You might refrain from opening one since we are near all-time highs, or you might want to set your stop limit pretty aggressively, especially since we don't have that backing volume. Again, this is what I would do. It's your money. Do what you want. All right, moving over to VeChain. This is VeChain's 4-hour chart. Looking at the 4-hour chart, there's a couple things that stand out to me here. There's a bullish divergence between the price right here. You see the price making a lower low and the stochastic making a higher low. This right here is called a bullish divergence. And what the bullish divergence tells us in a downtrend, as you see here, VeChain is coming down from these highs, is that the bears are exhausted and that a reversal from a downward trend back to an upward trend is on the horizon, right? And this is obviously based on volume. It is volume contingent, right? So if we zoom in here and you look at the volume, it's a little better than Ontology, as the green bars that we see are breaking that 20 period moving average, this yellow line that we see here. And historically, VeChain has had really healthy green volume bars and not much sell-offs following. So you have what pops out at you as bars that are breaking this 20-day moving average, and significantly so. You have these tall green bars are the fact that these bars are green. You don't see a lot of tall red bars, right? So that is a good sign for Ontology. So besides this bullish divergence, we have the fact that Ontology is now between the 0.5 and 0.618 fib levels. This is usually one of the buy zones when trying to re-enter a position on a security. You have the stochastic, the RSI, and the MACD trending upwards, which is great. You do have a lot of room for growth on the MACD. We are right at around the 50 line on the MACD. We are coming from this oversold position as well. Now on the fundamental side, VeChain is a boss. I mean, VeChain is one of those cryptos, one of a handful of cryptos that we have that is actually functional, that has signed partnerships and valid partnerships with multiple partners, as well as governments, or having the backing of governments, the Chinese government mainly, and that is currently in test runs with some big corporations. You've heard probably about the BMW one. That's what they're most known for. LVMH, which is the parent company of Louis Vuitton, also has an incubator trial going on right now with VeChain. And then here I found this. I'll link this in the description. But this is basically a list of VeChain partnerships and dApps. And if you don't know what VeChain is looking to improve the supply chain process of many companies within a variety of industries, right? So you'll see here, I mean, even the partnerships that they have to date are in real estate, financial, tobacco, automobile, and then we mentioned obviously LVMH, which is fashion. So there are a number of use cases for VeChain, and they seem to be able to scale to handle these different use cases, as well as the fact that they are launching their mainnet June 30th. I mean, that along with the technicals makes this a very compelling hold in your portfolio. Looking at EOS, we did send out a trade alert for EOS earlier in the day. We've been sending out trade alerts for EOS probably right around here since the beginning of April, and we've made double-digit profits multiple amounts of time on EOS, and it looks like that is not going to stop leading up to their mainnet launch, which I think is around June 2nd. Yes, June 2nd is their mainnet launch. So looking at EOS, if you just take a look at current price levels to the all-time highs, you already have 35, almost 36% of profit potential for EOS. And that's just if we reach the all-time high again, right? And there's no reason to believe that we won't, especially looking at these fundamentals. Let me just hide this real quick. Sorry, technicals, not fundamentals. Again, we see a clear divergence between the price, and this time between the price and the RSI. This is called a hidden bullish divergence. When the price makes a higher low and the RSI makes a lower low, you see that the MACD is just starting to trend up. This is where you want to catch things on a rally. The stochastic is also trending up. The RSI has a lot of room for growth to get to, where we were on the all-time highs when we hit about a 92 on the RSI scale. We are seeing some nice volume coming in, at least the last couple of candles. If we look more granular at the 4-hour chart, you do see a bunch of green candles bursting through that 20 period moving average, which is a good sign. I mean, that's what we want to see during rallies, right? Again, if you look at the previous videos that I had on volume, you can achieve certain price levels without volume, but the sustainability at those price levels is basically non-existent if you don't have that volume. Looking at the Fibonacci, we are right around, we just crossed the pivotal 0.618 level. This is usually where you see either the security or the coin hold its current price levels, or this tends to break down and not hold any longer, and we get below it again. But currently it looks like we're holding above 0.618. If you look at the overall trend itself, I mean, we don't even need to draw a trend line. You have this overall trend moving up, and there really isn't, besides there being, you know, some catastrophic failure in volume, there really isn't any sign that EOS is going to stop growing from now until the mainnet launch on June 2nd. You might see periods of pullbacks like we did here. But in the long term, I think we'll be fine for EOS. Again, there's no reason why you shouldn't have already been holding this. But if you aren't holding it for some reason, just know that with all these coins, I mean, we're basically near the all-time highs on a lot of these. So you will feel the ripple effects of every single retracement and pullback. You want to take that into account when setting your stop limit, right? So either if this was me and I didn't hold any of these coins, either I just wouldn't enter positions on them, or if I did, I would make sure that my stop limit takes into account that the pullbacks that we see are most likely temporary. But either way, I'll never overextend myself. Whether we're talking about crypto or stocks, I'll always have my stop limit set and my exit strategy known, and I will never, you know, lose more money than I'm willing to lose. Looking at TRX, which is definitely one of the more polarizing coins, and I go by the YouTube comments in order to gain this perception. XRP is definitely one of them. TRX is another one. People refer to these as shit coins sometimes. Politics aside, your feelings aside, let's look at the chart itself. So this is the 12-hour chart for TRX. You could see almost a perfect cup and handle forming. Here's the cup portion, here's the handle portion. What we tend to see usually is a breakout. Again, volume is very important. So barring any periods of low volume, what you tend to see after a cup and handle is a bullish breakout. You also see a possible 5-wave Elliott pattern forming. And if that plays out, then this 5th wave here will definitely have to be higher than this 3rd wave. So you know that you're at least going to around the 0.786 fib level on the Fibonacci. If we do get to all-time highs, then we stand to make about 43% from the current price levels. Again, we've been sending trade alerts on TRX for quite some time now. So I'm definitely not at this price level, but if you were to enter at this price level, you stand to make about 42% or 43% if we reach the all-time highs. The MACD is trending upwards. The stochastic is trending up, even though we are a little closer to the high in the stochastic than I'd like to see. But really that doesn't mean that there isn't room for growth. I mean, you can, as you can see here, you could spend quite a bit of time at the overbought level on the stochastic. The RSI still has a little bit of room to grow. Again, we suffer the volume problem along many of these coins. The entire market is really suffering from a volume problem. So I would like to see some of this volume kicking in, even though on TRX specifically, we see okay volume. Most of the green is pushing over that 20 period moving average. Just by eyeballing this, I can already tell you that there is a hidden bullish divergence between the price and between the RSI for the same period. You could see that the price made a higher low, the RSI made a lower low. Also, the same thing is occurring on the stochastic. So you can see that the stochastic made a lower low as well for the same period as the price. We are between the 0.5 and 0.618 fib levels. This point, if I did not enter a position yet, this is what I would do. I would wait to see how the market reacts to this 0.618 fib level, because again, this is usually a fork in the road where the bears either take over or the bulls take over and we shoot past this. So I would want to see how the market would react to this pivotal 0.618 fib level. But again, Tron does have a mainnet launching May 31st. If it is a successful launch, you can expect this price to keep going up. Now, if any of these coins fail their launch, it might spell disaster for their short-term price. Last but not least, we'll look at Aeternity. Now, Aeternity is another coin that doesn't have a lot of data going back to just February. And you'll see this is a perfect cup and handle if I've ever seen one. I don't even need to draw it out. You can see it with your eyes. Here's the cup. Here's the handle. It looks like a goddamn Starbucks mug. The one thing that's promising to me about this is all of this green volume here that gave us this rally to finish that cup portion of the cup and handle. And we don't see any significant red volume bars or red volume thereafter, meaning that people that bought here tended to hold onto their coin, and we don't really see anybody selling off. So the traders that bought here are expecting to hold this until achieving, further profit potential before selling off. We do see the stochastic trending up, the RSI trending up, and the MACD is not trending up yet. However, we do see on the histogram that the bars are getting lower. Now, when you're on the downside, this is what you want to see, meaning that the histogram has a potential for this blue, which is the 12, to curl and finally converge with the 26, and then finally diverge away from the 26, moving upwards. So if the MACD still hasn't given you a confirmation, but other indicators have, what you do want to look is at the histogram. If we are in the downward pattern on the histogram, where this histogram looks like it's upside down, then you do want to see these bars here getting shorter, and the shorter they get, meaning that means that the closer this blue will move into the orange line and possibly curl up. Now, Aeternity is one of those that to me I would consider a little riskier, because we are again near all-time highs. Now, it doesn't mean you can't make money on coins that are near all-time highs. I mean, there have been coins that were at all-time highs that have skyrocketed past those all-time highs, gaining double-digit percentage or even sometimes triple-digit percentages past the all-time highs. So it's not that it's out of the ordinary. It's just, it is out of the ordinary, right? It's just a matter of what's an anomaly versus what's the usual case. So I don't usually like to buy coins that are near all-time highs, but again, this is a young coin, hasn't really been on the market, previous to February 2018. They are launching their mainnet. Let's see. They're launching their mainnet sometime in June. It's unspecified yet. So being that we don't really have a price precedence for this, it would be a little riskier of a play for me. I would definitely be sure to set my stop limit a little more aggressively in order to catch any unexpected downtrends. If we get the price measuring tool and measure from here, you stand to make, I would say, about 20-something%. Let me see. If we hit all-time highs, you stand to make around, I guess that's respectable. You tend to make around 26% if you buy now, and we do hit all-time highs. Now, again, this is all contingent upon these projects actually successfully releasing on the dates that they state. If they tweet out that there's been a 3-month delay or a 1-year delay, God help us all if we hold these things. I would set my stop limit way more aggressively, in order to mitigate that risk. But now, besides the mainnet launch, from a fundamental standpoint, I love what Aeternity is attempting to do. They are basically making lightning fast smart contracts, right? So the reason that this is possible is, you can read it here off their own website. State channels make it possible to execute smart contracts off chain. So they're taking most of the smart contract functionality off chain, and only in the case of a disagreement between the contracting parties does the smart contract code get enforced by the blockchain. So that means it allows for faster communication between parties within a smart contract, because not everything is happening on chain. Another thing I love, which I think this will be invaluable to a number of different industries, whether we're talking about fintech, whether we're talking about gaming or gambling or politics, is this thing that they're calling oracles. And the way that they describe oracles, what if the fulfillment of a smart contract depends on weather conditions, a share price, or other public information from the real world? Oracles can provide tamper-proof data which contracts can act upon, election results, the price of assets such as gold, weather conditions, and many other real-world values play a crucial role for many business applications. Now, here are some real-life examples of how oracles can be used. Supply chain management. Containers or packages equipped with sensors can trigger smart contract execution based on location. Components lifecycle monitoring, triggering purchases of replacements before system failure. Automatic debit or credit of a company account based on greenhouse gas sensor readings. This relates to emissions trading schemes established worldwide. So you get the picture. It's basically being able to, the Oracle being able to report using tamper-proof data on whether a certain condition has been met. And if that condition has been met, then the smart contract is valid and executes. So from a fundamental standpoint, I really like what they're doing, and I think that there's actually a lot of use cases that this can fill. I mean, the thing with cryptocurrencies is, somebody comes up with a great idea, they start a crypto project, and then quickly, you find another development team that is able to creatively think of more use cases for similar functionality, and then they build their crypto project. And it's just, it's a battleground of competition. It's really like what the .com period was like, just with more complicated technology and with better innovation, right? Because we're now so in tune to technology, and our world is affected by technology in a way that wasn't back when the .com boom was a thing. So I think that this space is getting really competitive and really smart really fast. So it's really exciting, and it is because of that. I think that the filter of what becomes a successful crypto project in the future and what doesn't is a lot murkier, which makes our jobs as traders funner, right? Because we don't really know what's going to last. Now, maybe you don't want to engage in that kind of volatility, in which case the stock market is perfectly set up for you. Believe me, I was in the stock market for 18 years, and still am. So I'm not complaining. I do like the volatility of crypto for a certain portion of my portfolio. All right, guys, that is it for this video. Leave a comment. Leave a thumbs up, subscribe, hit that notification bell. If you want to go to the Blockchain Connect conference, link is in the comments below. If you would like to subscribe to the trade alerts and the weekly report, link is in the description. Follow me on Twitter, join the Discord, join the discussion. Stay safe out there. Peace.